Hello viewers, welcome to my channel. If you're new, please, as usual, do well to subscribe. All right, uh, hit the like button, share my videos. That is the only way you can support me. I'm not demanding anything from you. Just subscribe, hit the like button, share my video. If you have any comment, drop it at the comment section. Today, uh, as at the time I'm recording this video is 31st of August, year 2021. This topic I titled How to Analyze and Forecast Currency Pairs Ahead of Time. Any currency pairs that you deem fit, that you feel that you already know how it moves. And before you can be very conversant with any currency pair, please do what we call back testing. Do it over and over again every day. At the close of every trading day, do a back test, or maybe once in a week. All right, it's very important. By so doing, you will know the movement of your choice of currency pairs. Like me personally, I trade Euro USD, that is EU. All right. So the topic of today is how to simply analyze and forecast currency pairs ahead of time. All right. So when we mean that, what this means is this simply involves a combination of technical and a fundamental analysis. All right. So when we use the word technical, we are simply saying the study of historical price data so that you can identify patterns, trends that can help predict future price movements. All right. That is the technical aspect of uh, trading. All right. So now here is a step-by-step guide to help you get started. All right. Now, step one is the economic indicators. All right. Economic indicators monitor key indicators. These monitor key indicators from both the Eurozone and the US. In my own case right now, all right, I use my own case as a case study because I trade EU. That is the Euro USD. So the economic indicators that I should be looking at or looking out for is both the Eurozone, where euro is being spent as a currency, and where dollars is being spent as a currency. All right, is EU, such as the GDP, inflation rates, employment data, and interest rate decision. So on the economic indicators, these are what I should be monitoring. All right. Then how do you do all those things? You can simply go to your, excuse me, go to your calendar. All right, Forex Factory, you hit the calendar button, you see the news, the upcoming news event. So you don't need to go to elsewhere to get all those data. You just go to factory.com, forestfactory.com, like I've showed us in the last video, forestfactory.com, open calendar, it will show you, it will list all the days, like from Sundays to Saturday. So each day, the news that is being expected, like me, I did a filter. The only thing you see here is Euro USD. All right. Like this button is telling you the medium impact expected. All right. When this news is read, what it means is that when this news is read, is released, it has a little, a medium impact. All right. This is the color yellow, but we have this one that is red. has a high impact expected. Anytime it's released, you see market sentiment. If it strengthens the currency, the base currency, price will just rise. You see everybody going bullish. All right. If it's negative, that means it will have an impact. The quote currency will now get an upper hand. Then the price will go down. You see everybody buy. So guys, that is how you can you know, grab the news or the news event as you progress so you can make decisions. All right. Now, another point is the news events. All right. Stay updated on geopolitical events like central bank announcements and other news that could impact the currency pairs. All right. So, where do you get all those things? The forest factory uh, calendar, like I showed to us just now. From the forest factory, you see all these things. All right, it's very, very key and important. All right, another point is the step two that you need to take is identify trends. All right, you identify trend. Use moving averages, e.g., the 50-day and the 200-day, to identify the overall trend. So if you are still a beginner, all you need to do is plot a moving average. So the moving average will show you the overall trend. All right, you can use a moving average to identify if you are to go bullish or if the trend is reversing and is becoming bearish. An upward slope, the indicator now, an upward slope indicates an uptrend. When it's sloping upward, is indicating an uptrend, while a downward slope indicates a downtrend. Guys, it's very simple. Let me quickly bring out what do you call it? This moving average, so that we can see it very fast. This is what we call moving average. See the blue and the green line. All right. If it's going up, it's a bullish trend. If it's sloping down, it's a bearish trend. So let's show you where this thing was bearish. You can see downward slope is a downtrend, while the upward slope, if it's going up, is a bullish trend. You see, because it's going up, you see it's sloping upward. So guys, that is how it is, guys. Then apart from that one, you use support and resistance level. All right. By now, I believe we are conversant with that word support and resistance level. When we mean support, we are simply saying that a bearish trend gets to a level and it finds support, then it reverses. All right. For a support to be confirmed, there has to be a level where price in the past has stepped into and it reverses. For example, price came down like this. At this point, it went up. It came down, it respected this place, it went up. Even though it broke structure again, it came up. After the time it gets to this same level, it respected it. It came down again, it respected this level. This place like this, it's what we call a support level. Anywhere price finds a support and a reverse to the opposite direction. And for that level to be confirmed, there has to be in the past that price has tested that place more than twice. All right. Then the resistance part is when a trend is bullish and it gets to a level, it forms a resistance. Like here, one, two, three. So this is a confirmed and established resistance level. Even though price has broken through, you see, as soon as this price is coming down, once it get to this place, there will be a reaction. So guys, when you want to trade next week, as soon as the market open, at this point, at this very point, all you need to do here, bring out your fib, all right? This is just a tip. Bring out your fib like this. You see the price is coming down. All right. Meaning that anything from this 50%, which is the retracement level, to 70% like this is where you should be expecting a reaction. All right. If this place holds, that means if it gets a reaction at this level, if it holds, that means price will give you a formation to signal a reversal. If it fails to hold, it will only react. It cannot just pass, it will react. Then it will start coming down again. All right. So guys, that is how resistance and support is um, being traded. All right, you see support and resistance level. Now, these identify key support and resistance level on the chart. All right, these are price levels where the market has previously reversed direction. Like I told us, for it to be confirmed, there has to be a point where price has previously touched and reverse to the opposite direction. And for it to be confirmed as a resistance and support level, price must have touched that place and reversed more than twice. All right. Another point is the candlestick patterns. All right. Look for candlestick patterns such as in your chart, such as the doji, the hammer, or the engulfing patterns that can indicate a potential reversal. So you must watch out for all those things. For a trend to change, there's always a pattern. All right. If you look at this place here, price got to this point. What happened? It forms this thing. All right. There's a pattern here. And if you look at this place, this is a hammer before price. When price was ready, it got here, it pulled back. Let me just put my fib so that you know that fib is a technical tool that you must know how to use. Price started from here. This is where a pullback actually happened, because a pullback there has to be more than one opposite candle. This is a bearish trend. Now, at this point, we have one, two, more than two opposite candles. All these ones are just one, one, one. So it's not really important. All right. But this particular one might be important because there was a very nice pullback. All right. To retest this structure here. So at this point, look at it. It went back. Where did it find the resistance? 61.8. All right. Then there was, look at it, a pin bar signifies a rejection of price at this point. Then what happened? It flushed. All right. Price turned and look at it. Target point hit to negative 27.0. Very simple, guys. And these are dodgy, hammer, and govy patterns that can indicate potential reversal. Those are candlestick patterns that you should always. These are all these ones are candlestick patterns that form all those morning star, evening stars. They form every time. When there is a change in trend, you will see that. When there's an indecision, you see a dodgy. Maybe the trend is going upward. Once it gets to a place, you see it not really doing anything, that means the buyers are contemplating whether to push the market higher, the sellers are contemplating whether to still continue to push the price lower. So at that point, doji will form. But once that doji candle closes, then the next bar market, watch out. If it is a bullish engulfing or a bearish engulfing candle, if it is a pin bar you see, then you make your decision as a trader. All right. Then another the step three is the RSI, Relative Strength Index. This is used to identify overbought, all right, and oversold condition. All right, the RSI that I've taught us before, I really, delve into RSI. All these are indicators, all these are patterns that you can use to identify oversold and overbought condition. And above 7 a.m., all right, above 7 a.m., you say uh, is overbought. All right. Below 30 a.m., you said is oversold. All right. Then another indicator you need is the MACD, moving average convergence and divergence. Look for MACD line crossover to identify potential buy or sell signal. Anytime you see that MACD line crossover, it's a potential uh, buy or sell signal. Then another one is the Bollinger Bands. All right. Use Bollinger Bands to identify volatility and potential breakout points. When you hear the word Bollinger Band is an indicator, so you don't need to be scared about it. When you come to this place, you just type it Bollinger Band is here. When you plot it, you see what it does is that it creates a bounce. This from here to this point, it creates a bounce. All those things you see, people they have worked tirelessly to get all those things developed for you. So, but the only thing is that if you don't know them, you think they don't exist. They do exist. So this is the bound. This is the red, this is the green, right? Between this place and this place, you see prices are here. Prices, once you just see that there is a breakout, you see it now. You now see that this place, there's a break out of this band and you see a rejection. Please, you go short. You know that price will want to come down. And the same thing applicable. Once you come down, you see that once you are you once you see that the downside there's a breakout, all right, and there's a rejection there, you just go long. You can see like this. So that is what the Bollinger Band does. There is an indicator that is free. All you need to do is just type it Bollinger Band, and you just you know, um, plot it, and you continue to use it. All right. So it's free. It's free. You don't need to pay for it. Then step four is confluence. Look for areas where multiple indicators and analysis methods agree. For example, a support level that coincides with an oversold RSI can be a strong buy signal. You look for, like I said, look for confluences is very important. Then after you have done that, set entry and exit point. Based on your analysis, set clear entry and exit point for your trades. Use stop loss order to manage risk. Then the step five is that you regularly update, continuously monitor the how do you regularly how do you update regularly, continuously monitor the market and adjust your analysis based on news, data, and price movement. Review and learn. After the week ends, review your trades to understand what works and what did not work. So, guys, this will help you to improve your trading career. Thank you so much and subscribe